Good morning, everybody. We are live in our war room as usual, and this morning was great with the opening gap. So earnings season drives those opening gaps. It's the best time of all to be trading, the two SD reversions that I call the Baltimore chop. If you are currently getting ready for boot camp, then you know all about it, or you should know all about it. You've been working through those lessons, and there's a whole section on it there. We do have a question about one of the chops this morning from Naranjan. So I thought we're going to go over that as well as go over the strategy on the triple Qs and the Magnificent Seven for the rest of the trading day. All right, so let me just go and fire up the charts and let's take a look at what's going on. First, let's look at our QQQs and just sort of talk about what's going on here. We've had a day that started positive, and those earnings drove this thing pretty hard this morning. And then, of course, we had this happen. And as this was going on, as the move to the downside happened, we had a couple of opportunities. We had a good one on the Q and the NQ when price came back up into this 427 level. And then we had a target down $1 from there on the triple Qs. Of course, a much more substantial target on the futures. But right now, Qs are what we're focusing on. And you can see that the move played out perfectly. We got the exact leg of an extension that we expected to see, and currently we also had another move higher. So now this one came back up into this threshold level, so we just missed ticking that 425.93 threshold. But as I said in the first hour trading pit and in the war room today, it's those lines are going to be approximate, and when you get close enough that you wind up impacting with this right here, and with all of this volume by price, then what that tells you is that you've got the opportunity for a short side trade, and that's exactly what just happened. And then, of course, when it came back down into the threshold level 425.94, a little bit of a tighter target there, but it's sitting right on top of this stack over here, and it's a good bet that it's going to inflect there. So waiting for the exact inflection here at the average volatility is not the best move there. The best thing to do is wait for it to come down and actually tag those lines. Now, I wanted to take a look at this opening gap trade. So for those of you who are going to boot camp, this should be a bit of review. And for those of you who are just joining us in the room in the morning and sort of wondering what's going on, this is part of the free course that we have on Baltimore Chop. It's not the big well, it is. It's part of the free course and the in-depth course. There's a giant course on Baltimore Chop that goes through all the different ways you can get in and out of these things. But the basic strategy is you wait for a 2 standard deviation opening gap in terms of volatility. So we're using volatility to determine how big a gap is. Once we're 2 standard deviations out, we start counting. So in this case, it was a gap up. This low is low number 1. Here's low number 2, low number 3. We would follow this all the way up until the 10 a.m. mark Eastern time, looking for the possibility of an entry. Now, once we get up to this, once we have this 1, 2, 3 kind of a setup going on here, now what we're going to do is start figuring out targets for our trade. So let me mark this one in red, and we're going to say this is, or let's just call this the go line, and we're going to call this the green line, since this is where we're going to establish our short position, or where we did establish our short position this morning. And then, the next things that we need to figure out are sort of on the fly. We figure out where is our stop loss going to be. And in this case, we see here, this volume by price that happened. So you want to be up above there. So, this high, this absolute high was 93.27. 93.28, and you want to go at least 10-15 cents above that, at the least. So 93.44, 93.45, probably even 93.55 would be a good place to set a stop on this. It's a 40-cent stop. That's, or $1.40 stop rather. That's not bad on a move this magnitude. And then, when you go through to figure out where do we think price is going, what's the logical profit objective on this trade, then you start figuring on where did things happen, and what was the reaction move that we saw. And what you see here is that, when we got into this level right here, in the second bar of trading, we saw just a little bit of an inflection, and then boom, it popped higher. And that pop higher is the thing that we want to avoid. So once we get down to that threshold level again, which is what we did right here, then the profit taking that we're going to do is based on that. And it doesn't matter that price wound up doing all of this, because we have no expectancy that that's going to happen. What we think is probably going to happen is that it's going to move back up and retest this, and we don't want to be a part of that when we're short. So in that case, 92.15 was the entry on the trade, and 90.56 was the profit objective. And you can see there, how the logic played out. What we're doing here is we're focused on the fact that we're in the 95% confidence interval of the mean, and we know that in order to get that 95% confidence of the reversion move, that we are going to have to accept the fact, right, that there's going to be probably some bleed back up into this guy up here, but wound up being the case that, as usual, that we wound up with a really good trade there, a profitable trade on that position. So with that said, let's take a look at our strategy today in the Magnificent 7 stocks. And you can see here, oops, there we go. You can see here that what I've got is across the board, lots and lots of support and resistance based stuff going on. Everything is sort of trading in a big trend move. Not a lot of stuff in the box, so to speak, except for Amazon. So we talked about that in the War Room a few minutes ago, just talked about what the strategy is there, and just moving from that line back down into that range again. Not a ton of range there, 176.95, and is the high bar, and the next one down 176.72. That's sort of the trigger line, and then 176.36 is the profit objective on that one. So that's pretty much a scalp. It's a tight move. We do have some nice setups in Microsoft. We were talking about the same kind of a thing going on here. If Microsoft gets up above, I want it to retest the high up here and sort of bounce off of that same threshold level, get into that volume by price area there that's been holding it up over the course of the session, and then make a move back down again. And the short there would be 407.75 down to 406.85. That's what I'm looking at least. Meta, same kind of a thing. We are testing, we were just talking about this one, testing up above that green pivot. So 490.46, 490.50, somewhere in there. And then a move back down through there. 488.50 is really the place that I'm looking for it to go. NVIDIA has gone a little bit high this time, so it's really going to be time to go through and evaluate whether this level right here is maybe the next place we should be looking for support and resistance. So we're going to get a move back up here on a retest of 813.34. If we do, I'll look at that one as well. We'll do that in the War Room if it happens. And right, other than that, you just have to go through these things and look. Tesla's selling off, but from the big gap higher, I'm going to look at the move back up into this level right here, this 162.80-ish level. See if we can get a move back up into there that reverts and comes back down. I think if we see that happen, we could have a move back down at a 158.97. And over the course of the day, this has been the game plan, right? Because when they're not trading in the box, when they're trading in the trend, then what you have to do is, trend is your friend, as my buddy Landry always said, draw the big arrow and figure out where things are going. And once you've got it, what you're looking for are the pullbacks in the trend that get to support and resistance levels, and then a resumption of the trend. So this is common sense that ain't so common. People try to fade this stuff all the time. I'm not about fading it. I'm about figuring it out and figuring out where the order flow is going to be, and using that order flow to time those trades and figure out what the best position is to get in front of the opportunity for a profit. All right, so that is the strategy for today. That's the game plan. That's a little review. Naranjan, I hope you're watching. If you're not watching, you'll watch it on the replay. But I think we're good to go for the rest of the session. It's a trend moving kind of a day. It's a trend following kind of a day. If it gets into the box, if you see those Magnificent Seven stocks start to move sideways, box up going into the latter part of the session, then we can definitely start looking for the range plays. But for the time being, let's just look for moves to significant inflections, move to order flow thresholds, moves that get into significant confluence. We got lots and lots of stuff to choose from, lots of stocks to pick from, and it's just a matter of picking the ones that are setting up right and sitting on your hands when nothing's happening. All right, so have a great trading day, and I will see everybody right back here tomorrow. Have a good one.